There's no denying that Charlie Munger is a wealth of investing wisdom. Following his advice on what makes a great investment opportunity enabled many investors to generate very attractive returns. His latest investment in BYD realized a 15x return. Even I too purchased shares of BYD when the media announced his latest buying and selling. But I wasn't lucky like Charlie Munger and was late to the party, hence ending up with only a 2x return on my BYD investment. By the way, we have an important announcement coming for you at the end of the videos if you're interested in getting timely stock market alerts. Anyway, let's get back to the main theme of the video. Munger is famous for his investment approach that he summarizes with his famous quote, "All I want to know is where I'm going to die, so I'll never go there." Well, Munger couldn't find that place because he couldn't understand the workings of the Almighty, so Munger did what was humanly possible. He applied this approach to the investment world. Munger started analyzing investment opportunities and often found great investment ideas by following a simple strategy of working backwards. Munger said, and I quote, "Indeed, many problems can't be solved forward." Munger knows that it's in the nature of things that many hard problems are best solved when they're addressed backwards. So, Munger will create a doomsday scenario for his investment in any potential company, and then analyze how that company would perform in that worst-case scenario. If that company survives the harsh conditions, well, only then is it qualified as a Munger-grade investment. Charlie Munger is a proven master investor who has helped Warren Buffett generate returns that have crushed the S&P 500s for many decades. Additionally, he's made a wildly successful concentrated bet on Costco that generated a 37x return for his own firm. So we pay close attention to his investing wisdom when crafting our own portfolios. In this video, we're going to look at 3 specific pieces of his investing advice and some high-yielding picks that fit in with Charlie Munger's wisdom and can earn some handsome returns for investors. So, starting with Munger tip number 1, buy stocks that are easy to value. The first of Munger's investing gems that we look at today is, and let me read Munger's words, quote, "You're looking for a mispriced gamble. That's what investing is. And you have to know enough to know whether the gamble is mispriced. That's value investing." Essentially, what this boils down to is finding a stock where the risk-reward is asymmetrically in favor of whatever position you're looking to take in it. To be able to do this repeatedly and successfully, the stock needs to be easy to value. This all comes down to the circle of competence that Warren Buffett loves to talk about. While some investors have high-depth insight into certain complicated sectors like semiconductors, NVIDIA, or biotechnology, Pfizer, for the average retail investor without unique insight into these technical fields, it's best to stick with very easy-to-understand investment theses. For you and me, defensive businesses that generate very stable cash flows and grow within a very predictable range year after year, and then pass on the majority of their cash flow to shareholders via dividends and/or buybacks, are the easiest to value because the variables are much fewer and the estimates of future cash flows are much easier to arrive at. Some of our favorite industries to mine for these opportunities include REITs like WP Carey, midstream energy companies like Enbridge, utilities like Algonquin Power and Utilities, and BDCs like Ares Capital. Even some high-quality asset managers like Blackstone or BX fit this bill as well. Now, Munger tip number 2, buy high-quality businesses. Munger tip number 2 is, and I'm quoting, "A great business at a fair price is superior to a fair business at a great price." Great businesses make superior investments as compared to fair businesses for 2 big reasons. Number 1, great businesses by definition have superior competitive advantages, which makes applying Munger tip number 1 easier because there's less uncertainty about its future earning stream. And reason number 2, great businesses often surprise to the upside because they have an established track record of building a great corporate culture and employee team that can innovate and overcome unforeseen challenges and create new, exciting growth opportunities. This is what's helped to drive the superior long-term results of companies like Amazon and Apple, and literally gave new lifetime to companies like Tesla. And finally, Munger tip number 3. buy businesses that play the long game. Again, quoting Munger, tip number 3 is, "Today it seems to be regarded as the duty of CEOs to make the stock go up. This leads to all sorts of foolish behavior. We want to tell it like it is." While many management teams become enamored with financial engineering techniques to appease Wall Street analysts in the short term, true value is created by investing in the long-term well-being of the company. 2 tragic examples of this are International Business Machines, or IBM, and AT&T. Both of these companies repurchased shares hand over fist at elevated valuations in order to excite shareholders and appease analysts, at the expense of making aggressive and necessary investments in their future. As a result, both businesses fell into stagnant growth and underwhelming performance, and as a result, shareholder value was destroyed. We believe that the 3 nuggets of investing wisdom that we went over in this video are stocks that are easy to value, great businesses, playing the long game. They should play a particularly important role in shaping an investor's assessment of a potential investment opportunity. So, here are the 2 picks that fulfill Munger's wisdom and can provide a handsome return going forward. Starting with Realty Income, ticker symbol O, is a great fit for a portfolio looking to batten down the hatches for a recession because it has a phenomenal balance sheet, a battle-tested, recession-resistant business model, excellent management, and a very impressive track record. Its A- credit rating is one of the best in the REIT sector. Its conservative triple net lease business model has proven its mettle through numerous economic cycles, including the COVID-19 outbreak and the ensuing lockdowns, as well as the Great Financial Crisis. Over time, it's further reduced risk and improved its profit margins by amassing immense economies of scale. Today, it's the largest publicly traded triple net lease REIT, with a portfolio consisting of 11,733 properties and 1,147 tenants operating across 79 industries. Management skill is evidenced by the REIT's phenomenal track record of growing its dividend for 26 straight years, which, by the way, makes it a dividend aristocrat, and growing its FFO per share in 25 out of the past 26 years. As a result of all these qualities, it should not be surprising that its total return performance has absolutely crushed the S&P 500 since going public. Last but not least, O is now available to investors at a reasonable price thanks to its recent share price dip. Its enterprise value over EBITDA is 17.13x at present, well below its 5-year average of 19.41x. Its price over adjusted FFO is 16.02x, also well below its 5-year average of 18.52x. And finally, its dividend yield is 4.8%, well above its 5-year average of 4.4%. With recession around the corner and interest rates likely to peak in the near future, now might be a great time to add O to your portfolio if you're a risk-averse investor like Munger and you. Next is Stag Industrial, ticker symbol STAG. Stag's another great fit for portfolios looking for value, dividends, and potential breakout to the upside when interest rate scenarios improve in the second half of 2023. Strength was evident in Stag's Q3 results when it reported lease-over-lease cash rent growth of 13.6% and same-store cash NOI growth of 5.6%. Cash rent growth for new leases during Q3 was 19.4%, and for lease renewals, rent rates rose 9.5%. This growth momentum should help blunt some of the headwinds from a potential recession. On top of its current growth momentum, Stag's business model gives it additional margin of safety against economic hard times. Instead of going after the most expensive properties, Stag is an industrial real estate value-add investor. It typically targets properties in secondary markets that may have various issues that weaken its market value, such as above-average vacancy rates, short remaining terms on leases, and/or deferred capex. As a result, it can often buy these properties for less than they're worth, and then leverage its scale, cost of capital, and industry contacts and know-how as advantages in creating value in the properties. This means that it enjoys a wide margin of safety in its investments, giving it greater downside protection in each individual investment in the case of recession. On top of these numerous strengths, the stock also looks attractively priced. Its current P per FFO and P per AFO ratios are 14.99x and 16.62x respectively. Meanwhile, its 5-year average of P to AFO ratio is 16.11x, and its 5-year average P to FFO ratio is 17.37x. On top of that, its EV to EBITDA is only 16.72x compared to its 5-year average EV to EBITDA of 17.36x. And its P to NAV ratio of 0.92x also indicates a discount, especially given that it has historically traded in line with its NAV. O and Stag are two high-quality real estate businesses that are on the bargain rack after 2022's sell-off. Meanwhile, with a recession likely coming, and interest rates poised to peak and then possibly even begin falling this year, now looks like an excellent time to position your portfolio to profit with defensive names like these. Time for the important announcement. Now you can join our community of 5,000 plus members and active stock market investors and receive the latest timely stock market and economy related updates, like what stocks to buy and what stocks to ignore or sell to save your portfolios. For example, when Tesla was trading near 200, we gave the timely alert to buy put options to make money. Those who followed earned a 60% return. Economy and stock market related commentary and alerts are shared regularly on a weekly basis. You can also chat with me during market hours and ask me any questions. Join our community on Discord through Patreon. Upon becoming a member, you'll be able to enjoy some great perks. For example, you'll be able to receive proper buying and selling alerts for a wide range of potential stocks. We'll also share tips and alerts for option trading. You'll receive a weekly guide for stocks performance and updates with technical analysis. You'll be able to chat with over 5,000 like-minded members all the time. And you'll also be able to chat with me during market hours. I'd be delighted if you could join us. The link to join is given in the description below. Thanks,